welcome Mr. Alexander Gerding, our Managing Director, Mr. Narendranath Baliga, our Chief Financial Officer, and Anil Chaudhary, our Head of Manufacturing and Whole-Time Director, to this Analyst and Fund Managers Meet. I request each one of them to briefly introduce themselves, starting with you, Alexander.
Yeah, first of all, namaste, everybody, and very warm welcome from my side to the analysts and fund managers who are on the line. My name is Alexander Gerding. I had the honor to take over the position as Managing Director for BASF India Limited as of 1st of January 2023. And first and foremost, I would really like to give a special thanks to my predecessors. First and foremost, Mohan, who did a great job, and but also Rahman and Prasad. I think my predecessors have done a fantastic job to run the company, and my ambition is to follow their footsteps and to continue this successful growth story of BASF India Limited here in the country. So maybe some introduction so that you get to know me a little more. So I have been with BASF for 23 years. My background is business administration. I actually started right after high school with the company in a dual program that lasted 5 years, finishing with a Master of Business Administration in the US. And within the 23 years, I've had the opportunity to work in different regions, ranging from South America to North America, Eastern Europe, and now me and my family are very happy to call India our new home. My last position, so my positions in those 23 years have primarily been business related, so sales, marketing, and business management. In my last position, I was heading the agricultural solutions business for BASF in Eastern Europe, located in Germany. And so we're happy now to be here. I'm married to Lucrecia. Lucrecia is from Argentina. As you know, Argentina won the Soccer World Cup end of last year, so she's very happy, in a good mood right now. We are blessed with 4 children, 2 boys and 2 girls, so we have a good balance at home, I would say. We as a family are very, very happy to call India our new home. We arrived at the end of February and are really enjoying our time here and looking forward to also explore this beautiful country with the strong heritage. Very happy to be here and looking forward also to get to know all of you and to exchange today. So
thank you, Alexander. So we are also happy to have you here and looking forward as well.
Thanks, Alex. So good afternoon, everyone. I'm Narendranath Baliga, Chief Financial Officer of the company. I'm also heading the Global Business Service Unit for India. And I'm in BASF for 30 years, and most of you generally know me, so I'll stop there. Thank you. Anil?
Thank you, Naren. Again, good afternoon and welcome to the event today. I'm Anil Chaudhary, as Vice President and Whole-Time Director for BASF India Limited. I'm responsible for business segments like materials, surface technologies, and industrial. At the same time, also heading the manufacturing for BASF India Limited. I'm in BASF now since 12 years, and I have been working in this 12 years, apart from the current role, into various functions and businesses. And like Alex, I also started this current role from 1st of January 2023. Looking forward for today's discussion. Thank you.
Thank you. And to just introduce myself, Manor Kamath. I've been with BASF now for almost more than 15 years. My current role is I head the legal function. I'm also the General Counsel for BASF companies in India and also the Company Secretary for BASF India Limited. And we are happy to host this event for all of you. A quick notes on some of the key points. All the participants are requested to note that this meeting is being recorded, and the audio video recording of this meeting together with the presentation and the meeting transcript will be uploaded on our website and also submitted to the stock exchanges. I would like to also brief you on some of the important points for smooth conduct of this meeting. All of you have been put on mute mode to avoid any disturbance arising from the background noise, if any. During the question and answer session, the names of those who have already registered with us for asking questions will be called, and thereupon the respective speakers will be unmuted. Others who wish to raise their hands for asking questions, you can click on the raise hand icon on the Microsoft Teams page, and then you would be unmuted. If there are any questions that you would wish to ask during the meeting, you can also put it in the chat box, and we will be happy to even take those questions. Yeah. I would also request all the speakers to be brief while asking questions and queries. Now I request Alexander Gerding and Baliga to give a presentation on the company's performance for the financial year ended 31st March 2023 and take us through some of the other related topics. Over to you.
Thank you, Manohar. And obviously we're here to answer your questions. But before we do so, we have brought a few slides that we wanted to share. And maybe I'll kick it off and then I'll hand over to Naren to go more into the details of the numbers. And then looking forward really to have the open Q&A later with all of you. So maybe as a disclaimer, forward-looking statements, I think you are all aware about this, yeah, but I still would like to call it out. So we will only discuss matters in the public domain. And as a matter of policy, we do not provide any forecast about the future business situation. And we also do not comment or give guidance on future results or business outlook. I think that's important disclaimers. And in BASF, we always start meetings with safety, a safety moment, a safety briefing, which is also what we wanted to start today. I think safety is our #1 priority. It is our license to operate, and we constantly strive for a zero incident, zero accident mindset. So if we look at our safety performance at BASF India Limited in the financial year 22-23, you can see here two key KPIs, which is lost time injury, which we call LTI, and process safety incident, PSI. And you can see that on lost time injury, we actually have an improvement, but still we had one incident, which was a hot water splash, where one colleague got some hot water on the hip. Fortunately, the colleague is fully recovered, and obviously we implemented measures to avoid this from happening again by providing filters where this incident happened. Yeah. We also had 3 minor process safety incidents. 2 out of them were minor leakages without any operator exposure, without any environmental impact, so they were quite contained. Yeah, but nonetheless, also there we analyzed the root causes and made technical updates to avoid these from happening again. I think it's important to mention that we didn't have any high severity incidents, neither on lost time injury nor on process safety incident in BASF India Limited last year, and also no fatality. And I think that's very important. And our safety track record in BASF India Limited has been extremely solid. It's actually better than the global average, and we want to maintain that very safe track record moving forward. Nonetheless, every incident, every accident is one incident, an accident too much. So we really strive for a zero incident accident mindset. And anytime we have an incident, even if it's minor, it doesn't matter. We have immediate exchanges between the site and the plant operators, trying to find out the root cause, and we always implement measures to avoid these incidences from happening again. We also include in our target agreements safety KPIs, and not only target agreements of our colleagues that are operating at the plants, but also our business colleagues. Yeah, so this is a mindset that we drive in the company, and that is very important because it is our license to operate. So having said that, I wanted to share a few of the highlights of 2022-23, and maybe starting with the expansion of our production capabilities. So in fiscal year 22-23, we doubled our production capability for dispersions at the H site. So we had another line which is well running, and well utilized already today. So very successful ramp up also of this line. We also had an expansion for ultramid polyamides at Panoli, and we started Sovamol production at Mangalore. So I think three key investments about expansion that increases our production capability to service our customers in India. We also improved our business excellence, so we had successful launches of new products, and I think this is not the first time that you hear about one example which I brought here, which is Exponas, an insecticide in the fruits and vegetable segment. I think this was really a fantastic launch, very well and professionally prepared by the team, and I think within 130 days we reached 100 crore sales with this product, and this is shaping to become a very substantial product in our agricultural portfolio. And what is especially important to mention is that we historically have been more of a herbicide and fungicide company, and here we're entering really the insecticide segment, which obviously is a very important segment in India. And this is allowing us to really diversify our portfolio and make us also more resilient as an agricultural business. So very successful launch. We also launched a new dispersion. So this is not the only launch, neither in the agricultural space nor in BASF India Limited in 2022, but it's just one example. If you look to the middle, we also introduced several web shops, different business units. But here I brought just one example for performance materials. The footwear, cater to the footwear industry as one of several. But here our ambition and our intention is really to improve the customer experience. Customers can go on these web shops, they can find out more about our products, they can place orders, track orders. And not just it's not just allowing existing customers to find out more, but also prospective customers. So customers that are interested in finding out about BASF products can go on this website. So it's also expanding our customer reach. And then most recently, we've been attained as an authorized economic operator, with a T3 classification for customs, which is really a testament and big congratulations and kudos to the team that was involved in attaining this certification. It's the highest certification possible. We already had a T2 classification, now we have T3, and there's only very few large chemical companies that have this level of classification, and it really showcases that we are extremely, we have the highest compliance standards also with customs and imports, and this new classification will allow us to custom clear our products even faster in the future. So it's a clear benefit. It will provide more speed, more flexibility that our customers in India will also experience. So I think these are some examples of how we improved our business excellence in 22-23. We also had very active stakeholder engagement. So here, and I will not go into each of these, but you see different segments. I mean, most recently, the upper left picture, we had our key distribution partners in the Agricultural Solutions division together recognizing their support to BASF India Limited in 2022-2023 fiscal year. Agricultural Solutions had really a great performance, a great year. And here we had 50 distributors represented. That is a significant portion of our business in Agricultural Solutions with a recognition. We also, in the middle, were active in the Indian Chemical Council presenting about sustainability. And then you see also, with our pharma customers, with our Care Chemicals Intermediates team, battery materials, which is certainly a prospective industry that is developing and will grow in the future, and also our Performance Materials team at PU Tech, which is a very important platform where we participated as well. So we were present and active in key industry platforms and continuously engaging with our key stakeholders, especially our customers. Well, obviously our biggest asset that we have in the company is our people. And I think we focus on our employees and obviously also want to provide an inclusive environment for employees. So on the upper left, you see at the H side, we recently introduced washing facilities for our female colleagues here. We obviously also recognize our long-standing employees that have been around with us for more than 25 years in special employee recognition sessions. Here you see a picture of in Mangalore, in one of our multi-OD sites. Yeah. Diversity and inclusion is very important for us, and we continue to foster and drive diversity and inclusion across the entire organization. We also had the honor to receive several awards that you see on the lower left. And we also want to give back to our communities. So I had the honor to recently introduce a digital classroom. Education is extremely important. I mean, I have 4 children of my own, so I know what it means to have good education. And here, I'm honored that we were able to have a digital classroom being installed here in Navi Mumbai, actually very close to our head office, at one school. And this will be done in multiple schools across India. We're also going to be actively looking at introducing again Kids Lab, to also make kids more familiar to chemistry, because we also want to make sure that in the future we have good prospective future BASF employees. So giving back to community, I think, is equally important, and taking care of our employees is a key priority for us. Now, if I had to sort of summarize last year, and I think this picture is also quite valid for this year. What would be the picture I would select? And it looks a bit like this. We had to find a picture where we don't have any copyright infringement. So initially there was another one, but we opted for this one finally. So if you look a little bit and before Naren goes now into the financials and goes more into detail, I just wanted to give maybe a quick intro, starting with the macroeconomic environment. So obviously with the Russian invasion into Ukraine and the ongoing war that we are confronted with since end of February 2022, which then also had a massive impact on an energy crisis, especially in Western Europe. I think this situation then also led or influenced inflation in many countries. We have rising interest rates. COVID was still around us in 2022. I mean, there were some countries more affected than others, but I think we've had sort of a cloudy, not so easy context, macroeconomically. And this obviously also impacted BASF. And if you look at, the publicly announced results of BASF SE in Germany, we always talk about when we talk about the calendar year 2022, so January to December, we always talk about two halves in BASF SE. Yeah, the first half, which was probably the best first half we've ever had in the company, and then the second half, which was probably one of the worst second halves that we've had in the company. So a very mixed bag. Yeah, so there was some sunlight, but there were a lot of clouds as well. And I think if you look at our situation in BASF India Limited, there is some reflection of that as well. Yeah, so our first quarter fiscal year, which is the second quarter calendar year, 2022, was extremely strong. But then we saw, July onwards, also a softening of demand, as we see macroeconomically as well. And that has been impacting especially our upstream businesses, if you look at the materials and chemicals segments, while our downstream businesses were quite robust. Yeah, and so it was also a mixed picture for us in BASF India Limited. And I would hand over now to Naren to go a little bit more in details into the numbers, and then we'll sort of conclude later.
Thanks, Alex. Thanks, Alex. So thanks also for setting the context before we go into the financial performance section. As you know, we have 6 segments in BASF, each segment having 2 business units, except for Agriculture Solution, which is a segment by itself. And when you see the pie chart, you realize materials is our biggest segment, with 28% contributing to the total sales, which is 13,600 crores. And coming second is nutrition and care, which was not so much there in BASF in India before 3 years back. Yeah, before COVID, it was not there, and now it has become one of the second or one of the biggest segments that we have, which has 2 business units: care chemicals and nutrition and health. Agriculture Solution, most of you are always interested in this and ask questions on Agriculture Solution. How big is it? What is it doing? 13% of our sales is coming from Agricultural Solutions, as compared to probably around 40% many years back. So it has become a more diversified product portfolio company going forward. And all the segments of BASF globally are represented in India. Some of the businesses have manufacturing in India, and some of the businesses have trading in India. So depending on what the customer needs, we have the capability to bring that material to them in the most efficient manner. The results you have seen a couple of days back, quarter on quarter, we have kind of maintained a already very good year of January, March quarter. And like Alex explained, the first half of last year, 2022, was one of the best ever for the chemical industry globally. And we are also the beneficiaries of that for the March 2022 quarter. And following that, for the current year, we have been able to maintain the sales almost at the same level, a small 3% reduction, but a good performance of last year has been maintained in January to March 2023 also. But at the same time, like I'm going to explain in the further slides, the margins have been hit hard with the increased input prices, and also coupled with the softening of the sales price. Yeah, this is because of the commodity prices volatility. This has happened. Input prices have gone up, but we have not been able to pass on the fully change to the customer. So prices have also softened. So with that, almost 50% reduction in the profit before tax, before special item. And looking at the full year results, already a good year of April, March 2022 has been matched with a 4% growth, which is mostly coming out of volume growth. Yeah, would be interesting for you to know that almost 10-12% volume growth we could achieve on last year performance, and the softening prices impacted the results with a 30% reduction in the profit before tax. So I'll drill this down yearly performance of both revenue and PBT in the next slides. Before we go there, it would be kind of interesting to see how did we perform pre-COVID and over the quarters. So each one of the bars here on the left shows you quarterly performance. Starting with March 2020, which is pre-COVID, I can say, And if you remember, during that period, we had around 1,900 crores, 1,900 crores as our sales, around there, 1,900, 2,000 crores sales per quarter. And June 2020 was the kind of the worst quarter where we could get only 1,800. But we know at that time we had lockdowns in the company, and some of our, or rather all the operational plants were closed down, locked down physically, and that's what we have suffered there. After that, like I mentioned when I was showing the segments, almost every segment did well, and we could achieve a higher growth quarter to quarter. Though the June quarters, as you know, with our agro contributing, is one of the best always in a year. June is the best quarter that we have, and that is shown here for June 21, followed by June 22. CAGR on an annual basis, compounded growth of 22%. So I'm starting it from before COVID, pre-COVID, 1,900 crores, 2,000 crores, and a 22% CAGR over a period consistently we have maintained. Quarter to quarter, there is a kind of a up and down, but then over a period of a full year, we have achieved that in the last 3 financial years. Profit before tax, before exceptional items, June 20, because of the lockdown that we had, 1 quarter of loss, and after that, we have showed a good profit every quarter, especially in the June quarter, which happens to be the best in the year. December 2022, when we published the result, there was a surprise in the market. How come it fell that much? And when you looked at the industry also, almost every company suffered during that quarter. Demands were softening, prices were softening, and there were challenges. The good thing is by March 23, we have been able to bring back the profitability, and we have registered 100 crores for March 2023. This is the net working capital development. The dark blue bar at the bottom is the accounts receivable. The light blue bar at the top is the inventory, and the gray bar at the bottom below the line is the accounts payable. And the line at the top, the golden, the orange color line at the top is the net working capital we have. So we saw in the earlier slide, we have grown at a CAGR of 22%, but the challenge was to grow at that rate and in a sustainable manner by keeping the cost controlled and by having the working capital under control. So over that period, 1,200 crores is what we have been able to achieve. Repeatedly, quarter by quarter, year by year, we have been able to fine-tune our whole logistics process, supply chain process, and inventory process so that we don't cross the limits and maintain it within a reasonable limit. 1,200 crores is already a challenge. I mean, I would say it's one of the rock bottom net working capital we can maintain, but keeping it low definitely helps us in our cash management. And as you know, which we have said last time, we have become a debt-free company now. On 31st March, there was no debt. Once in a while, we borrow small amounts for bridge loan, but otherwise, we are kind of debt-free. And that is possible because of the net working capital management that we have been able to achieve. So 1,200 crores is what you have to remember as we go into the last slide. Revenue starting from 1,300 crores last year to now it's 13,645. And if you ask what are the segments which contributed to this growth of 3%, agriculture solution, materials, and nutrition and care stand out. These 3 stand out as significant contributors. And whatever you show in the green bar is the incremental sales over last year. Yes, it's not the total sales. Total sales is the bottom. You see, for example, if I take agriculture solution, last year it was 1,539 crores, and this year it is 1,800 crores. So the incremental increase is 258 crores. So from that perspective, when you see chemicals is the one segment which we got hit very badly. Alex talked about that also, the situation we were facing and how the second half was significantly worse off for us. And when we say second half, it means the first quarter was the only good quarter that we had. After that, 3 quarters we had to kind of face demand crunch and falling selling prices. With that, chemicals has suffered. And now if we go to the next slide, you will see what that means. Yeah, why did the 747 crore come down to 528 crore? Yep, the biggest hit is from the materials segment, where we have performance materials and monomers. This is the one where we got hit very badly. And chemicals, though it shows minus 71 compared to the previous year quarter, still it's a very good achievement of earning 40 crores, sorry. It's a pure merchandise business for us, the chemicals, and we have earned 40 crores from that business alone. So that I would say is a good performance. It's the material one which we have been impacted both by increasing input costs and also softening sales price because of the commodity price movements. The key performance indicator. So what does that mean when we finally crunch it down to the summary slide? What does that mean? Receivable days of 66 days. Yeah, we already showed in the earlier slide how we have maintained the net working capital under 1,200 crores. And that one of the contributor is the receivable days. At just 66 days we have maintained, despite having businesses like agro included there, yeah, which has sometimes longer credit days. And in the receivable days, it's only 66, and thereof, if you see overdues, that's again a very small amount overdue. That again is very strictly maintained. Anything about 90 days is only 3 to 4 crores. Yeah? On an average, we have only 3 to 4 crores, which crosses 90 days. Is that kind of a strict management of receivables? Inventories, most of our materials we import. Yeah? 80% of our purchases are imported from different countries. It could come from Germany, from Antwerp, from Korea, from China, but we import. And that has a pretty long lead time. Despite that, a 66 days, in my opinion, is kind of very, very fine-tuning it. Probably a little more also is okay. 70 days up to it should be good, because you don't want to miss on an opportunity when the customer wants the material. You cannot be saying, okay, wait for 2 months till I get imported from Europe. So we have to achieve that balance, and for all the 11 business units, we have to ensure that there is enough inventory to cater to the customer needs. 66 days is pretty competitive there. Cash flow from operations, you have noticed this, 500 plus crores of cash generated from operations, and we have 350 crores of cash in various forms, either in cash balance or corporate deposits. None of the cash is sitting idle there. We have deployed it in the group companies as intercorporate deposits at a very attractive rate, and it's a win-win for both the companies to have this arrangement. And there are times when we have to borrow for a very short period, 10 days, 12 days, 15 days, kind of we borrow, and then we repay when we get the collection at the end of the month, because we run the payment cycle on a periodical basis. When the payment cycle runs, we have to probably borrow sometimes. So we kind of retain that cash to ensure that we have sufficient cash to deploy if there is a working capital requirement. We have very tight situation there with only 66 days of inventory. And if that's to be increased, we have sufficient cash to take care of that. Operating expenses slightly higher. Here, the definition of operating expenses, all expenses excluding employee cost, excluding raw material cost, and basically depreciation. Yeah, these are the three things we exclude, and then there's a slight increase, but I would say most of that is kind of productive fixed cost increase when the business unit wants to increase their sales team. That's the kind of cost that is there. But there is very good control on the fixed cost. Yeah, that's under control. EBIT before special item, 4%. That is one area where we had to kind of keep an eye on and keep it at a good higher rate. Last year it was say around 6%, now at around 4%. Return on capital employed, yeah, the EBIT over the capital employed, yeah, how much EBIT we could generate for every dollar of capital employed. It is still at a very good 21.5%. Last year was exceptionally good, 35.8%, one of the best we ever had. And if some of you remember, in the earlier days when we had the Dahej commissioning, we hit hard on the ROCE, and our clear target was to bring it up to a decent level. And I would say now we are in a very good position of 22% return on capital employed. Even stricter terms, I use RONA, the return on net assets, to see profit after tax, after incurring all the interest rate, after incurring all the tax, the profit after tax, and compared to net assets that we have deployed to generate this revenue, how much will that be? That's around 20%. that's the strictest measure you can apply, especially for a chemical industry. You need to see, because we have asset rich, yeah, we have a lot of assets, capital intensive industry, and how much we are earning, 20% on the assets. That's a very good number. So that I'm proud of to have that kind of a result this year, despite all the challenges that Alex talked about. EPS, earning per share before exceptional item, is 90 rupees as against 135. That was again a good performance last year. Comparatively, still we are performing pretty well. And before special items, it's 90 rupees per share. And if you remember our announcement, we declared a 80% dividend, 80, and it's subject to approval of the shareholders. It's approved by the board, recommended by the board. It's shareholder approval during the AGM. And as compared to 60% last year, this year we gave 80%, and 2 years back it was 100% with 50% normal dividend and 50% special dividend for sale of one of the business units that we did. So we gave some special dividend at that time. It was 100%, 60%, and now it's 50%, or rather 80%. So if I take only the normal dividend, we have shown an increasing trend there, 50%, 60%, and 80% now. And that works out to a good 8 to 9% payout ratio as compared to 5. So generally, we want to go there with a higher payout ratio, but at the same time, ensure that we reserve enough cash to take care of our working capital requirement and other productive jobs. That's my last slide. I hand over to Alex to conclude, summarize. Yeah, and conclude.
Thank you, Naren. And maybe to close, so the picture of sort of a mix between cloudy skies and sunlight coming out is probably still valid, yeah, also for the current times. Now, we don't give any forward-looking statements, yeah, but I think the context that I described in the beginning, I mean, we're still within that macroeconomic global context, yeah. I think demand is soft in many industries. China recovery, it has not happened as initially expected. I think we all expected after Chinese New Year with the zero COVID restriction being lifted, yeah, that demand in China would pick up stronger and faster. It is picking up, but it's not picking up at the level that we expected. And I think if you look at the GDP there, it's also driven more by services and less by durable goods. Yeah, so people are traveling again, people are going into restaurants again, especially after pandemic times. Yeah, but they're not buying a lot of stuff right now. So I think we see a dampened soft demand, and we need to be prepared for that. Yeah. So what is our focus as a company in such an environment? Is obviously to stay close to our customers. I mean, it's very important in difficult times or in challenging times, yeah, to be as close as possible to your customers and continue to ensure profitable and sustainable growth. We want to also maximize our asset utilization while increasing our operations and continue, as Naren described. I think the team has done a fantastic job, yeah, of a tight working capital management and keeping costs under control. I think growing CAGR, in the last few years by 22% while keeping cost of capital flat. I think that's a great accomplishment and very prudent management of the assets and the working capital. So we want to continue to maintain that prudent management. And lastly, I mean, it is very important that we focus on our people and we focus on our talent pipeline, succession planning, talent development, and continue to foster diversity and inclusion, create an inclusive environment. I think we've made a lot of progress there. I think there's more to do. And I want to close by saying, I mean, we don't want to paint a dark picture here, yeah, very clear, but we want to paint a cautious, balanced picture. Yeah, I think we're cautiously optimistic. I mean, India is well positioned, is well placed now even more than ever. I think we're getting a lot of attention. India is getting a lot of attention, not only within BASF, but also in the media, yeah, given the current macroeconomic and geopolitical context globally. I think there are key fundamentals in India that are very strong. If you talk about the demographic dividend being the most, the highest demographic dividend in the world now, having surpassed China. Also, there was one projection of one of the big consultancy companies saying that by 2030 there will be 100 million Indians, which is more than the entire population of my home country, Germany. 100 million that will be uplifted to the medium to higher income bracket, which is $10,000 and higher household income per year. And obviously this aspiring and young population, will have willingness and capability also to spend more also in premium products, and I think that's where BASF will be able to contribute and participate as well. So the fundamentals, I think, are strong. Also, the government policies, I think having a stable government for now the ninth year, very also business oriented with the PLI schemes. I think it's very, very good and strong fundamentals. GDP growth this year is projected to be solid. I think with the size of India, I think having around 6% GDP growth expectation, I think is strong. So I would say the fundamentals are strong, but we cannot isolate us completely from the macroeconomic global context. So we have to be cautious, and we're cautiously optimistic here, and preparing ourselves to obviously maximize our opportunities and keeping a good balance between protecting our margins, while at the same time also not losing market share and running our assets to the highest level possible and keeping our costs under control. I think that's really the focus for us moving forward. And with that, I would conclude here and really open up the floor for Q&A.
Thanks.
Thank you.
Thanks, Alex. And thanks, Naren, for the presentation. For people who are online, if you want to ask any questions, please raise your hand by clicking the raise hand icon on the Microsoft Teams, and we will be giving you the opportunity to speak and ask your questions. So the first speaker for us is Mr. Varun Bang, and he's from Bryanstone Investments. Varun? Varun, are you there? Varun Bang? Can you are able to hear us? Are you on mute? Okay, we will come back to you. Rohit Nagraj from Centrum Broking Limited. Rohit?
Hello, can you hear me?
Yes.
Yeah.
Yes.
Good evening,
Yes,
good evening, and thanks for the opportunity. So few questions. One, I think, is a generic one. In terms of our 6 segments, what is the current demand environment, both at domestic level and globally? Just to understand how the market situation is evolving for our business segments. Thank you.
Yeah, so maybe I'll start here. Thank you for that question. Let's start maybe from global, and then we get closer to home. I think we are still seeing, and without providing any forward-looking statements again, a key disclaimer here. But I think, as you can also see in the numbers, I mean, we see a softening of demand globally with high inflation in many countries, with high interest rates. I think consumers are cautious right now to spend, especially, as I mentioned, in durable goods. So, I mean, people are traveling again, are going to restaurants, but and I think that is a dynamic that is certainly impacting many segments. What we see And as mentioned as well, if we look at our upstream businesses, chemicals and materials, I think the softening of demand is certainly influencing those segments. If we look more downstream, I think there are some industries where we still see quite robust development. I mean, one is the automotive industry. I think here we've also shown very strong results, and I think 3 out of the 6 segments we have are catering the automotive industry. So also here we had probably some pent-up demand coming out of COVID, that was strongly influencing. But I think the automotive segment, I would say, has been quite robust. But probably the growth rates we also saw last year might not be fully applicable. I think there's still growth expectation, but it will be probably at a different magnitude since the pent-up demand has sort of come to a more stable environment. But automotive would probably be one to mention. I think the second one is the agricultural segment. I think agriculture is doing well. Commodity prices are maybe not at the highest, when you look at the soft commodity prices, but they're also not at the lowest, so they're still healthy, and I think farmers are willing and capable to invest to improve their yields and increase productivity, and that is something that we see across the world. When it comes to the, let's say, consumer industries, fast-moving consumer industries, I think it depends really on the categories. Services are in demand. The durable goods are probably more difficult right now, which is reflected also in what we see. So that's a little bit what I would maybe highlight from a global perspective. And then coming closer to home, we probably see a similar picture. I mean, automotive industry also in India. I think last year the automotive industry, if I recall, the number of cars sold in India surpassed the number of cars sold in Germany, for the first time, and actually also surpassed Japan. But then Japan is coming back as well. So I think also the automotive industry in India is quite robust. There is obviously a lot of preparation for the electrification in the automotive space, where we are also active, engaging with key stakeholders here, cell manufacturers, for example. I think this will be an industry that will be undergoing also some transformation in the future, and BASF will participate there as well. So I think automotive is also solid development in India. Agriculture as well. I think the key question on agriculture this year, as you all know, is will it be an El Nino year? I mean, the weather forecasts are clearly indicating that it will be a very dry year. So we remains to be seen. I think we are prepared. Our team is prepared for the worst, but hoping for the best. But we will have to see. And since the economy in India, as far as I understand, is also quite dependent on how the rural economy in India develops. Since more than 50 to 60% of the population in India is somehow directly connected to rural India. We'll have to see how the monsoon and the Nino situation develops here. But the fundamentals in agriculture are strong, and also BASF here, I think, as we mentioned, with stepping into the insecticide segment and showing the performance that we delivered with the team, has had a very solid track record. I think construction, which construction and infrastructure is also quite solid in India. Obviously this year we have a lot of state elections. Next year we have national elections. So we do believe that there's still a lot of tailwind despite higher interest rates compared to historic averages. We still see that construction and infrastructure industry is well developing. On the consumer side, it's probably a little bit of a mix as well. I think rural India is still a bit dampened, but urban The urban economy is doing okay, is doing well. So it's probably a mixed situation there as well. So remains to be seen how the next few months also develops. But that's a bit the context when you look at global and when you look at the domestic situation.
Thank you.
Thanks for providing that context. The second question is in terms of the inventory situation, particularly on the agricultural solutions and materials segment. So globally, I think there have been destocking which is going on, and demand is relatively muted. So what is the condition in India and from our context? Thank you.
Yes. So fortunately, we've started the season with very healthy channel inventories. Yeah. So I think the team has done a tremendous job to ensure that the products that we place into the channel also are going out of the channel. Yeah. And are applied on the ground. Agro. Yeah. I'm talking about agricultural solutions. Yeah. So we started the season with quite healthy channel inventories. I know that this might not be the case everywhere, but I cannot speak about other companies. I can speak only about BASF. Nonetheless, we are preparing ourselves for a potential El Nino season. Yeah, so taking appropriate measures there, also from a portfolio mix perspective to be prepared, and also placing our products maybe closer to application timing into the channels to make sure that our products are at the right spots in the country at the right time. Yeah, because if El Nino comes, it will not affect the entire country at once. Yeah, it will be different depending on which location you're talking about. Yeah, so I think we're taking appropriate measures here. So to close, we have a healthy channel inventory. Nonetheless, we do see that the context and the environment is not going to be easy, especially with the backdrop of a potential dry season.
Right, and same with the material segment. Any feedback on that?
Yeah, so I think, as you know, and as Naren described, I think our business is a mix, of imports or traded business and all manufactured products. So I would say, I can't speak now in detail on the inventory situation in every single business. Yeah, but I would dare to say we don't have a problem here. I think we're managing, as Naren also showed in his slides, we're managing our working capital very effectively, have been over the years. Yeah, making sure we keep the inventory necessary in the country, but we also don't overexpose ourselves. Nonetheless, obviously, especially in the upstream segments like materials and chemicals, when you import and then when you sell, there might be a time lag. Yeah, so which is also what we have seen affecting us in the past. Yeah, that when commodity prices change and when demand is dampened, softened, we're in a very competitive space. Yeah, so to keep our market share, to protect our presence, we have to compete, and that can put pressure on our prices and on our margins, which we have been seeing in the materials and chemicals businesses in recent months. Yeah, so that's the current dynamic that is certainly still there. But I wouldn't say that we have a significant inventory problem. Yeah, I think we're managing it, and wherever we have maybe higher inventories, we'll manage it accordingly.
Sure. I'll take one last question and then come back in the queue. One is in terms of the growth levers for BASF India over the next 3 to 5 years. Given that we are now debt free and we are generating healthy cash flows, and just a disconnect between our parent and us, that our parent usually provides a yearly guidance. However, we refrain from giving any yearly guidance. Thank you.
Yeah, so again, I repeat, we don't give any forward-looking statements and any forward-looking guidance, I think. But what I can say is as I mentioned in the beginning, I think there is a lot of attention on India right now within the company. I think we've had high-level visits in the last 3 months, probably more than in the last years. Yeah, so presidents and even board members visiting us here. So I think there is high awareness and attention on the situation in India. I think India is also, as I described, with the key fundamentals, quite well positioned. GDP growth, demographic dividend, increasing middle class. So I think there are key strong segment developments. Yeah. So I think there are key dynamics that are speaking for India. And I think we will continue to participate here and capture every opportunity possible with each of the businesses we have. And fortunately, all 11 operating divisions, all six segments, we are active in this country. So I think we will capitalize and maximize our opportunities in this country moving forward as well. So that's as much as I would say here.
Sure. Thanks a lot. I'll come back for a few more questions later. Thank you.
Thanks, Rohit. Thanks. And we come back to Mr. Varun Bang from Bryanston Investments.
Yeah, am I audible now?
Yes, very much, Varun. Please go ahead.
Yeah, thank you for the opportunity and the detailed presentation. And congrats for strong performance in AgChem division. Welcome, Alexander. I have 2-3 questions for you. So first one is, if I look at Mr. Krishna Mohan's journey in BASF India, so throughout his tenure, he focused on driving profitable growth and focused on delivering higher ROCE. So while his journey was volatile, he was reasonably successful in driving both profitability and ROCE. So in that context, what is your goal for this organization and what changes you would like to see in the organization, more importantly, in its financial performance?
Yeah. Thank you for that question. And first and foremost, I'm a big believer of don't fix what is not broken. Yeah. First, second, I would say what you described about my predecessors' management. Yeah. I'm really thankful. I think they've done really a strong job to make sure that BASF India Limited continues to develop successfully and grows profitably. So my ambition is to continue on that legacy. I think I'm not coming here to change. I think for us, the same priorities are equally important and continue to apply. We want to grow the business profitably and sustainably, and at the same time continue to manage very prudently our net working capital and our costs, and continue to develop the organization into the future. Yeah. So I think the same elements apply, and I think being present with 11 operating divisions, having both upstream and downstream, allows us to give a certain resilience. So when some segments like upstream is struggling, downstream is still quite robust, yeah, and mitigating the impact. And I think this diversification and balance we need to continue. Same with profitability and market share, market presence. Yeah, I think we want to protect and continue to expand our profitability, because at the end we have to deliver value to our key stakeholders, while at the same time also not losing market share and making sure our assets are running with high asset utilization. Yeah, so I think it's finding the right balance to continue to grow profitably and sustainably, and I think that's my ambition. Yeah, and I think that was also the ambition of my predecessors.
Okay. And Alex, critics say that BASF India is a company which has limited pricing power and it is largely commoditized business. So in 3 to 4 months, so you being into the system for 3 to 4 months, what are your thoughts on this? What portion of our business is commodity kind business with low pricing power? If you can just share your thoughts.
Yeah, first I would disagree to that statement. I don't think we have limiting pricing power. And if you look at our development, we've raised prices also quite significantly, passing on also increased costs that we had to pass on. and we are quite successful in doing that. Yeah, in most of our businesses. Yeah, and so I wouldn't say that we have limiting pricing power. Nonetheless, right now and in recent months, we have also been impacted by a softening of demand, and obviously, since China recovery did not happen fast and maybe with the magnitude that we were expecting, there was probably oversupply, and somewhere the products have to go. So I think the competitive environment was very, very aggressive, and obviously we were faced with that as well. Yeah, but I think this is a context that was applicable not only to us. Yeah, I think it was affecting the entire industry. So I wouldn't say that we have limiting pricing power.
We have a good mix, Varun, of both commodities and specialty business. For coatings, for example, we have been able to increase our prices with the OEMs, which is one of the hardest sell always. Yeah, but because of the product quality, because of the pricing power, they also understand. Health and nutrition, again, the same case. Agro is the same case. And then we have other products also, which are kind of commodities. So it's a good mix of both. And I agree with Alex that we do have good pricing power. And we have showed it in the last 2 years, how we can capture the opportunities.
Okay, that's a fair explanation. Last question, again to Alex. Given your rich experience on agro solutions side, how can your expertise can be used to grow AgChem division of BASF India? Can we look at any export opportunities on AgChem side? Can you share your thoughts if any intermediate manufacturing opportunity can be looked at from BASF India?
Yeah, thank you for that question. And I do have a track record in agricultural solutions. I would never say that I'm an expert in anything, because you always learn, every day, even in every segment. Yeah, there is continuous learning. But first, I would say that I'm very impressed by what the agricultural solutions team in India has delivered. Yeah, I think the performance has really been stellar. And we've really also are stepping in to diversify our portfolio, to make our portfolio more resilient, not only from a product mix perspective and indication perspective, fungicide, herbicide, insecticide, seeds, digital solutions, but also from a geographic perspective. So I think we're present in all spots of the country now, with our portfolio supporting our farmers. Yeah. So I would first say, I mean, the team really has done a great job. At the same time, we want to continue on that journey and continue to grow profitably and sustainably in that segment. Yeah, and we are having a lot of, actually the team is pulling me in very intensively, to a point where I have to say, hey, I need to learn and get deeper into all the other segments where I don't have the same amount of experience. Yeah, but I think there is a lot of plans, without making any forward-looking statements now. I think the team is having a clear strategic direction and view. I think you saw that we not only increased our presence in the market over the last few years. Yeah, we have a higher market share now. We have a broader, more resilient portfolio. I think we'll continue to work on expanding our portfolio further and expanding our presence also in the insecticide arena. I think that's one key element that we have been working on and will continue to work on. I think with the local, production that you mentioned, I think the team also over the last years has increased significantly the amount of products that are locally formulated. I think this is also something that we'll continue to look at. I think the team has done a good job. We have a plan in place, and I will fully support that plan. And wherever we see opportunities, you mentioned export. I mean, our modus operandi as a company is we always invest where the markets are, where our customers are. Yeah. So whenever we do investments, whenever we localize, it's always because there's local demand driving those projects and those investments. Yeah. So we usually don't invest for export. Yeah. but we invest to cater to our local customers and markets.
Okay, that's a fair explanation. I have a small suggestion. It would be great if we can have a physical interaction with the management at least every 6 months. That would be helpful.
Yeah, we will look into that. Whatever is required, or for us to do under the relevant laws, we will do that. And definitely, the intent is to have at least twice a year an interaction with the analyst and fund managers, and that at least we want to continue so that there is clear interaction between the two parties. Yeah, but thanks for the suggestion.
Thank you from my side. Thank you.
Thank you, Varun.
So the next one is Mr. Aman Shah from GK Investments Private Limited.
Yeah, hi. Good evening, gentlemen. Thank you for the opportunity. So my question was a few questions. One is we are seeing an increasing trend by many chemical companies who are setting up their backward integration plants in India and even their own capacity expansion that is going on full stream in life science and agrochemicals. How should we see our volume growth from a medium term perspective? Like when we are seeing a lot of chemical expansion in the midstream side, in the building block side, also in India.
Thank you for that question. Obviously, I cannot speak about sort of what other companies are doing. Yeah, I can only speak for BASF India Limited. I think the volume growth fundamentals in India. I come back, to the key fundamentals are going to give enough space for everybody to participate. Yeah, and I think our intention is to maximize our presence, our footprint, to bring innovations to our customers in India, and we'll continue to do that also in the future. Yeah, so we cater to many different segments. I mean, we have 11 operating divisions. We have 6 segments ranging from automotive to agriculture to construction, consumer goods, paints. So we are present in many different segments, which also allows us to maximize our opportunities with the development in these segments, which is undisputed will continue to happen in India. So I would say that we will participate with every opportunity we will get to expand our presence and our market share in India. Aman.
Okay, great. Yeah. Secondly, we generate roughly around 500 crores every year in operating cash flow. Last year we did, and hopefully we will continue on that thing. How do we look at our capital investments? In last 2 years, we have spent roughly around 100 crore each, 90 and 150 crores. So how do we look at our capital investments going forward?
So as I had presented on one of my slides, we doubled the capacity for dispersions business, last year. So you see that we do invest, in expanding our capacity. And it usually comes accompanied by increasing business. Yeah. So if the business is there, we tend to accompany it also with the proper capacities required to cater to that business, to that growing business. Yeah. And I think this is something that you will be continuing to see with BASF. You have been seeing it in the past. That will continue to happen. Yes, as Naren had shown, we have a good cash flow, which we certainly also use to manage our working capital. And given the context that we're in, which is sort of a cautionary macroeconomic context, we want to make sure that we reserve cash to manage our business operations moving forward and not have to rely on probably taking loans, yeah, too much, yeah. So manage really our future based on our own, with our own means, yeah. So I would say when it comes to bigger investments, yeah, and now I'm talking my personal opinion, yeah. So this is, I do believe that there will be opportunities. I think the growth potential that India has demonstrated and will continue to demonstrate moving forward is undisputed. The question is what type of bigger investment, when, where, in what magnitude, and probably also with which partners. Yeah. So I think personally, I think the time for a bigger investment will come. It's just a matter of when is the right time. And when we do big investments, I mean, the demand in the country has to justify such a world-scale type of investment. Yeah, and I think today, despite the fact demand has been growing over the years, you know, I think we're still not there. But I think we will continue to look at opportunities also moving forward. And again, this is my personal opinion. For me, it's not a matter of if, but rather a matter of when. And I think, you know, you see also in the past years, I mean, BASF has continuously invested in India. I mean, expanding capacities, dispersion line, just one example for last year, but also the Dahej multi-OD site that was built not so many years ago, the innovation campus that we have in Navi Mumbai. So not only manufacturing capabilities, but also research and development capabilities, we continuously expand. We have in PM a development lab that is being constructed here in Thane site. So it's not only about manufacturing capabilities, it's also about research and development capabilities. And we have continuously invested in India, and I think we'll continue to look into opportunities also in the future. But the business case has to be solid. In BASF, we have a very stringent process for CapEx investments. We have to go to commissions, we have to build business cases, and obviously the demand locally has to justify larger scale investments.
So Aman, I would like to de-link the cash generation capability with the investment need. You know, we never had any shortage of capital in BASF. Yeah, either we have generated cash, the banks are too happy to lend to BASF anytime. A group has also funds to invest if the business unit thinks there is an opportunity. So only because we have generated cash, we don't want to kind of build up plants. Plant will come on its own at the right time, and we have the funds for that.
Yes, absolutely. That is helpful, sir. So the other question is, in Q3 of this financial year, we had increasing raw material prices, and then that was not, means prices to be passed on to customers were a bit tough. So softening of our gross margin. Cost of goods sold also increased to some 86% level, 85.8%. We saw a good improvement quarter on quarter in Q4. What is the current environment? How good are we able to now pass on the prices to customers?
So probably also depends segment by segment, business unit by business unit. It might be a different mixed picture. I think generally, I would say that, you know, we always intend, you know, if our costs are going up, we always intend to pass it on to our customers. Yeah? And I think sometimes we can do it faster, sometimes slower, but I think the direction, and you've seen it also in our results last year, I think that was a clear direction that we had, yeah, to protect our margins. And the challenge that we have in some segments is that not only maybe the costs have been, you know, in recent months high, but also the softening of demand in the market, and specifically in Asia, the slow recovery of the Chinese demand, you know, has led to a situation where there was probably longer markets, yeah, more inventory, more products out there, and that had to be placed, yeah. And that has led to a very competitive, from a pricing perspective, very competitive environment in the one or the other business. So for us to keep our position, to not lose significantly position, we had to compete there. Yeah, I think, and that made it difficult to potentially continue to pass on price increases. But as I said before, I think we want to keep the right balance. I think our aim is always to provide and focus on value generation, on profitability, both relative and absolute. But to also get absolute profitability, you need to sell and you need to have volume sales. Yeah, and you cannot allow yourself to lose significant market share. So and presence. Yeah. So I think it's finding the right balance here to do that. But I would say that the current environment is not an easy one, and it's probably a slightly different segment by segment.
Sure. Okay. Thank you so much. And all
Thank you.
Thank you, Aman.
Thank you, Aman. The next one is Anshum Nadecha from Rhinestone Investments. Anshum? Can you hear us? Okay, we will come back to Anshum. We have Archit Joshi from B&K Securities.
Hi, good evening, gentlemen, and thanks for a detailed presentation. Sir, I have two questions. So first, if you can provide a split of the merchandising and the manufacturing sales. Also, if you can provide this information on our earnings before interest and tax. And a corollary to this question is, if I see the performance for the last 5 years, which probably was one of the best commodity cycles that we witnessed, the merchandising sales that we have been doing would probably must have sold it on a much higher price, which is why we have been able to grow so significantly, especially in FY21 and FY22. And coincidentally, this happened when we kind of changed our business models from being a commission-based model to a merchandising model. Now going ahead, as I can see, commodity prices are softening. Even the price of a lot of chemicals that we are also selling are on a declining trend. How do we see this merchandising business for us going ahead, since the spreads are more or less contracting? And do we have some internal targets set for each of the business segments within merchandising to have a certain level of return on capital employed or EBIT margins or something of that sort? If you can guide us on that, will be very helpful. Thank you.
So maybe here, Archit, thank you for those questions. I'll maybe start and ask Naren to complement and complete. So we don't have any specific target. What should be the proper split? I do believe that it's good to have a balance here as well, and I think today it's more or less 50-50. I think Naren will have more accurate numbers here, but between the two, merchandising, manufacturing, and I think in a downward cycle macroeconomic environment, it's also not bad to have such a split and to have a trading business, yeah, because you can import any time, and if there is enough supply out there, you can always cater to that. And we also don't want to have underutilized assets and idle capacity costs, yeah, which is something that our aim is always to run our capacities that we have at the highest level possible, yeah, and to sweat our assets, which I think we have also been successfully doing in the past. So to answer one part of your question, we don't have a target yet. At the same time, with growing demand in the country, we want to be close to our customers, and we want to be as flexible and agile as possible. And certainly our ambition is to increase our local presence and provide as high flexibility and agility as possible. And I think this is something that we will look in the different businesses, individually, on how to develop our own manufactured products as component, which always has to go along with rising business opportunity. So I don't know. I would maybe pass on to Naren to complement and complete.
Thanks, Alex. So, Archit, you're right. This year we were at around 45% OMP and 55 merchandise, 45-55 ratio. Last year it was around 40-60, 40 OMP, 60 merchandise. And I'm glad you remember the time when we had switched from the earlier Indian business, what we call the agency business, into merchandise business, which gave us a lot of pricing power. Because the material was available on the in the warehouse, and we could sell it overnight, as against a agency business where the customer had to wait for 2 months. So 60 earlier, if you remember, it was 60-40. Yeah, 60 was OMP and 40 merchandise, and that's swapped, and now we have 45-55 as OMP merchandise. Does that answer your question? And like Alex said, we don't have any targets how much they have to attend. They have to attend the best possible result. And we have cases where they have some budget and they cross by a significant margin, which is always welcome.
Right, sir. That definitely does partly answer my question. So where I was leading to from this question was that the last, as I said, we had the best cycle maybe for the last 4 or 5 years, and we definitely must have been benefited from the switch that we did in terms of the change in business model, and now we can merchandise the products of our own entities. But going ahead, sir, where I was coming from is that now that we are seeing contracting spreads, and probably we don't know if the best times may not be completely over, but they are not as good as they used to be maybe 2-3 years back. From here, it seems that volume growth will be one of the most important things to grow in terms of businesses. Maybe the pricing tailwind has more or less faded away. So do we have anything on this front? Because from the capex side, I believe that Alex mentioned earlier that we have doubled the dispersion capacity. There are a couple of more things that we have added, but the capex that we did back then, and in 2013-14, we are well utilized on that front, is my assumption. So where would be the room for growth going ahead? That is where I was trying to lead to.
Actually, so I mean, I think you're right that volume is an important element that we have to continue to maintain the momentum on volume, especially in India. Considering also the strong fundamentals that India demonstrates and will continue to show in the future. While at the same time we have to protect our margins as well, right? So we don't want to have just any business. We want to have a profitable and sustainable business in the country. I think so. We want to maintain and protect our margin, as long as possible, while also attaining a good volume presence in the market. So I would say there is opportunities to do that. And as I mentioned before, I mean, many different segments still show robust dynamics. Yeah, I mean, be it automotive, be it agriculture, be it construction, even in the consumer space. I think there is with the demographic dividend and the rising middle class in India, I think there will be a space to capture. Yeah, so if you look at the electrification in the automotive segment, I mean, battery materials will certainly be a very important segment also moving forward. We're very active there, talking to cell manufacturers. I think BASF will participate in that segment as well. Sustainability, renewable raw materials, recycled raw materials. I think that's also where a lot of dynamics are happening also in India. and I think supported also by the government, who is incentivizing this space as well. And I think there we're also talking to relevant stakeholders, on how BASF can participate there directly or indirectly in that space. So I think there is good opportunities to continue to perform in India, and that's our ambition.
Also, maybe in short term we can cater to the demand growth and volume growth from our overseas plants. So we are well positioned in terms of global operations footprint, and we can definitely import and have the merchandise business models to suffice our demand growth in short term.
Sure, sir. Thanks a lot, and all the best. Thanks a lot.
Thank you.
Thank you. Thank you. We come back to Anshum.
Yeah. Am I audible now?
Yes, please.
Yeah. Hi, Alex. Welcome to India. And I have a question to you. I've been asking Mohan the same question. So, given the current context, both globally and domestically, there are certain areas, wherein future potential manufacturing can come to BASF India. And you have just said that it's a question of when, not if. So my question is, which are the areas wherein we see there is a potential which can come to BASF India for those manufacturing plants as an opportunity to us probably in next 3 to 5 years?
Anshun, maybe just to again disclaim my comments. So that was my personal opinion, and obviously also my ambition as the managing director of BASF India Limited. I mean, my ambition is really to attract the utmost attention on India within BASF, and to make sure that together with the team, we make a case, and develop opportunities and projects, proposals together with the business units. Obviously, this always is strongly driven and supported also by the relevant business units. And so it was my personal opinion that I strongly believe, given the context and the fundamentals that we spoke about today, that it's not a matter of if, but it's a matter of when. Having said that, we cannot disclose any specifics on ongoing discussions. I can only assure you that we're looking into all the different value chains, and we're also looking at the ecosystem overall, right? Because we have to have an ecosystem that will be ready for potential opportunities in that space, and we also have to look at partnerships, So I think I can assure you that we're actively and constantly looking at opportunities, analyzing opportunities, but I cannot disclose to you any details on that. And I mentioned the attention is there on India. We're getting a lot of attention. We're having a lot of discussions internally, and I'm hopeful that a lot of these discussions will eventually also translate into projects, that have to then go to the specific approval processes that we have in the company, commissions and board, and it's a normal process that we go through as a multinational company. But that's as much as I can say, Anshum.
Okay. One more question, and while we have been, Mohan has done a great job, and you also aspire to, kind of repeat what Mohan has done and continue that. And I think it's little premature to ask because it's just been 4 or 5 months since you have been at the helm. But still, other than what the continuity aspect of Mohan's, the way Mohan has managed the ship, what are the 2-3 areas which you think you can add more value to BASF India, and what would be probably those top 3 priorities other than probably the continuity aspect of what we have delivered in the last 3-4 years?
Yeah, thank you for that question, Anshun. And you're right. I'm here for a few months, and Mohan has left a very strong legacy, and I have a lot of respect and admiration, for what he did, and also his predecessors here. Looking at also the track record of the business development in India, And allow me a bit of time to make sure, I mean, my ambition for this year is one, to visit all the sites that we have at least once, to engage with as many employees as possible in the year, to get to know as many customers as possible and external stakeholders as well, to get a full and comprehensive picture of our situation in the country. And for that, I would ask for a bit more time. So as mentioned before, I think a key ambition when it comes to business performance is to continue to grow profitably and sustainably in the country. I think elements that I had mentioned a little bit, I think there is a lot of, I mean, sustainability is here to stay, right? I think there's a lot of discussions around the sustainability front, and I think here we're quite active to participate in these discussions. I think that's an area where I will definitely contribute as well. Digitalization, I think we've come a long way. Also, I mean, we talked about web shops. I think also there is many things that we can still work on. Diversity and inclusion, I think we've done many developments there. I mean, a few years back, I remember our gender balance or our female ratio was 7%. We're now at 11%. We still cannot be happy with that gender balance. And it's not all about gender. I mean, diversity and inclusion goes beyond gender. But I think there is certainly, I think Mohan has done a lot, but I think we need to do more, to have a more diverse and inclusive company, and that's certainly one of my ambitions where I intend to put also focus on. So that's just to give you a little bit of a glimpse of some of the areas that I already see where I think we will spend, I will spend more time with. But allow me also for a little bit more time. So maybe at the next call I will be able to give some more flavor to that.
Thank you so much, Alex. Best wishes to you on your journey here in India, and it will be a pleasure to meet you sometime.
Thank you, Anshul.
Thank you. We have Rohit. Rohit, you would like to come back and ask some questions?
Yeah, I have a couple of them. Thanks for the follow-up. Yeah. One question is in terms of last, say, 2-3 years, what are the number of new products or molecules that we have received from our parent and which have been commercialized across different segments? And just to get a perspective, how the trend has been maybe over the past decade or so. I mean, hopefully that will give us an understanding about how the future looks like instead of, indulging on a particular guidance or outlook. Thank you.
Yeah. Thank you, Rohit, for the question. I mean, I don't have a specific number now here prepared yet to where I can say how many number of products we have launched in the last few years. But what I can say is that India is a strategic country. It's a very important country for BASF. And as you can see, our business has also, with 22% CAGR over the last few years growth, our business has grown. And all the research and development activities that we do, in every business unit, I think India is always one country, strategic country, where our product portfolio that we develop around the world, will be catered to. And as you also know, we have innovation campus here, where we do R&D, not only for India, but for the world. So I think there's also strong R&D capabilities and competence in India that we also fully benefit from as a company. So I think without going now into individual products, I think we bring innovations to India as well. I mentioned in the agricultural space some of it to increase our presence, increase our footprint. and also bring new and innovative products to the country, and that will continue to happen.
Right. Got. I mean, directionally, that gives some sense. Just one clarification on the merchandise business. So, as I understand, agricultural solution, chemicals, and materials are the ones which are come completely under merchandise.
No, materials has own production. Chemicals is the one, this one where we have one segment where we have all merchandise business. Chemical segment, full merchandise, whereas materials, we have performance material, which is a own manufactured product, but it does not mean it's only manufacturing, but we import also. But then we have monomers also in the same material section. And agro, yes, we do get toll manufactured in country. Yeah.
Right. Got it. Thanks a lot for answering all the questions and best of luck, sir.
Thank you.
Thank you. Thank you. Do you have any speakers? Okay. Okay, so thank you so much, everyone, for attending and for participation today, and request you to take care and be safe. So thank you from our side, and we see you next time in November.
Yeah, thank you very much for your active participation. I wish all of you a great weekend, and looking forward to further engagement also in the future. Thank you.